story from last year with the swine flu. If you remember, a year ago, there was a culling of the herd due to the swine flu. That's largely behind us. And then you also have that compounded with the flooding that increased transportation costs. So now that that's behind us, we're seeing our first decline in pork prices since February of 2019. So that was a large part of it. The other thing is you had pressure on energy prices. So pork, which is a huge staple, and then energy were major components. So while it was the slowest inflation since 2009, this was really one-off events with an excessive pressure on energy, excessive pressure on pork prices. You also saw it in the producer price index. Those industries that were related to food processing and anything food related and oil related were down, but metals, smelting, textiles were all up. So this is not a sign of overall economic slowness. This was just a one-off due to catching up on the food prices.
Now, I want to turn to consumption now, because some analysts believe that the key to boosting consumption lies in boosting social welfare, as well as having higher rural incomes. What are your thoughts?
Yeah, well, I'll tell you, we saw the National Day holiday in October last month, Rochelle, was really off the charts. Just looking at the movie ticket sales, they're confined to 75% capacity, and yet it was the second highest box office for a National Day in history. So that's showing healthy consumer demand. 637 million people took domestic vacations for the holiday last month. The hotel bookings were at pre-pandemic levels. The air travel was greater than 2019 for the same holiday. So everything is really showing that the consumer is strong. And if you think about the recovery, Rochelle, the first quarter was the shutdown. You had negative 6.8% GDP growth. The second quarter was really the factory and manufacturing reopening, where you saw growth of plus 3.2%. And this third quarter has really been the resurgence of the consumer with a 4.9% GDP growth, positive GDP growth. So everything is now firing on all cylinders. China is expected to grow 7 or 8% plus GDP in 2021, and they're really about 3 months ahead of the developed world based on the trajectory of the virus and their recovery.
Now, I want to talk about the dual circulation development model that China is using now. What's needed to really best support that, especially during this post-pandemic recovery?
Well, you saw this is to be both international trade and internal demand. They want to boost internal demand. You saw President Xi Jinping talking about it. One of the components is they wanted to produce 40% of all semiconductors for domestic use internally this year. It looks like they'll be on track to do that, and more than 70% by 2025. And if you look at the long-term growth plan that was laid out, they want to double GDP growth and GDP, and that would require growing at about 4.8% compounded for the next 15 years by 2035. And if you look at the numbers that we're seeing, they're right back on track with trend to move this ahead. So it's a response to kind of the protectionist winds that have been out in the last 12 to 24 months, that they want to increase the internal demand, but they still want the multilateral trade and the international trade to continue and even expand.
And speaking of international trade, obviously, presidential election here in the U.S., how much does a Biden presidency affect the trade picture since the Phase 1 trade deal started under the Trump administration?
Yeah, I think it will remain in place for the time being. I would imagine that you're going to see a lessening of the friction and probably increased trade facility between the two countries. So I would expect that to move ahead forward. If you look at the China export numbers, though, they haven't been too shabby. They were phenomenal last month, up 11.4% versus 9.3% expectations, and that was largely driven by demand for medical supplies and for work-from-home supplies, computers, microphones, cameras, et cetera. So that was solid, but I think as the trade normalizes, you'll see the import demand pick back up to normalized levels. That was a little weak at plus 4.7% last month, but that should start to pick up moving forward over the next 12 to 24 months.
All right. Thank you, as always. Thomas Hayes there, founder, chairman, and managing